And then what, do you split? It just gets divided in proportions because that's how the payment's going to
All right, good morning, everyone. Let me get going here. All right. Yeah, the bull market continues to chug along here. Yesterday, I think for me personally was quite a surprise how strong the market was, considering some of some of the happenings in the market the day before. We had a couple of the big blue chips that were disappointing in my mind. In terms of earnings. You can see that yesterday that Nasdaq never really could get off the ground. I mean, Nasdaq actually finished down 0.25%, and that's before we got we got earnings out of Microsoft and out of Google. So that whole time the Nasdaq was actually down more than that earlier in the session. And because the Nasdaq it's kind of been the leader in the market. I was surprised to see that the market had so much traction yesterday. You could see European markets were unbelievably strong after we got up out of that little lull of the beginning of the day. So I think it's earnings season. Like I said, I think last night matters, and I think watching today, going forward, and seeing what's going to happen, I just I find it very difficult to believe that some of these leaders in the market, like your Googles, and that of the world, are going to be able to disappoint, and you're going to be able to see the market continue to take out new highs. So at some point here, I think we see an inflection point, but we'll wait and see when that is. Asia was down pretty much across the board. You can see there everything very small percentages for the most part. Japan was down 1.2%. I think at one point it was down 2%, but a bit of a question mark as to why it may be so weak. I think there's also the Democratic ruling Liberal Democratic Party there that's expected to clinch majority, and all that's going to do is give more support to Abe. So I don't understand why that would be a negative for Asia, for Japan, but we're seeing some weakness there, even with a little bit weaker yen. All right, like we said earlier, Google, Microsoft, they both missed. Quite badly, to be honest. I mean, those are big misses, and what would be considered, some of the bigger, obviously the biggest technology companies in the world, and what I think would had big expectations on them, at least in terms of Google. We've also got some big ones today: Honeywell, Schlumberger, and then GE, which is probably one of the best economic bellwethers that we've got. So I would say really pay attention to GE today. It's only out later in the day, but I think tonight's numbers out of GE are going to be really, really important. So we'll pay attention to that. Also, we've got Netcare, which is going ex-div 27 cents over the weekend. We've also got a bunch of broker upgrades, downgrades. We got Anglos, which was rated hold at Societe Generale. Target price 226. It was rated buy at Deutsche Bank. Target price 255. Neutral at Credit Suisse. Target price 241. Kumba was raised to neutral versus underperform at B of A Merrill. We have Vodacom, which was rated underweight at Barclays with a target price of 112. They were also rated hold at Deutsche Bank, target price 117.50, a rand higher than where it is now. And Discovery was cut to underperform versus neutral at Credit Suisse. Very light day for market data today. We had all industry index in Japan, which was slight miss. And then we've got finance ministers and central bank governors meeting for the G20 later today. So very light day for data today. We'll just have to kind of sit here and play the traffic. One thing I will make a comment on right now is that futures seem to be holding relatively well, in the U.S. and in Europe, considering some of those big earnings misses. So, going into earnings season, we actually rallied coming into earnings season. It was the biggest negative revisions that we've had in about 20 years for any quarter out of the U.S. Market's still continuing to rally into that. We're starting to see a little bit of weakness in terms of earnings out of some of the majors in the States, and the market still continues to kind of grind higher. So just realize the kind of market that we're in at the moment can be a dangerous market. I think maybe people are quite underweight, and that's why we're getting this continued drift to the upside. Let's just have a quick look at the Aussie, which as of yesterday's close really came up and tested again this really critical level, and this is starting to define itself more and more. 36,500. You can see there how many touches we have. 1, 2, basically call it 3, 4 on the wick the other day, 5 as of yesterday's close. We were then about 40 points, I think, as of yesterday's close. So 36,500 is really becoming a critical level for our index. If this continues to move out further to the right, we could end up looking at a little bit like a head and shoulder pattern here, potentially, something that we'll keep an eye on. But this level is obviously making itself more and more important every time that it fails off of that 36,500. Okay, let's look at Anglos. Obviously a lot of broker upgrades, downgrades. We showed this one yesterday. I just wanted to have a look at it again today. This is really clearly defined in my mind. 210 Rand is really the level. Like I said, I know I got upgraded today on a couple of guys. We closed yesterday at about 208 and closed there in London as well. I know that some of those mining stocks are down in London. Maybe this one trades a little bit better because of broker upgrade, downgrades, maybe the Rand weekends. At 210, I think personally it's probably worth a bit of a fade here at 210. The big bounce, 25 Rand into this level. First test of a significant level in my mind is usually has trouble. Things have trouble breaking through. This has been a dog. Henceforth, I think that we could see some weakness off of that level if we get up there today, tomorrow, sometime like that. All right, let's jump forward to here in the CFR. This one really ripped hard into the close yesterday. I think we moved up about $1.30 into the close. 92.50 is clearly the level here in CFR. You can see that very easily. We closed above it. Obviously, it continued its strength into the afternoon close in Switzerland, and this thing really set up for a move higher. I know we had this false breakout the other day. Head faked us, came down and had one hard day of selling. That was pretty much all we got. We really held the trend line, completely stayed intact. So this thing's really looking good to continue its move higher to that 98.50 or 102 target in CFR. All right, Naspers. I want to look at Naspers. I'll just have a quick look at a 30-minute in Naspers and just move forward a little bit here. This is really clearly defined, I think, as well. You can look here if you go all the way back to that little wick up there. When we broke out at 785, that's without question. You can see here where the top end of resistance has been. It's been exactly at $800. We've tested it several times, and you can see there how it's just kind of building up the sideways consolidation, building to make its next break. Either way we come out of this channel, in my mind, it's really clearly defined as well, whichever way we go. That we're going to go about 15 Rand to the upside or to the downside. We're looking at about 20 Rand to the downside. Like I said, very clearly defined. So I like these kind of things. We get above $800. It literally hasn't even been able to put a print above $800, but it's traded at 800 3 different days. So this is really important. If we can get a print above 800, I think this thing could be off to the races quickly to 815. So you guys that are actively punting, you want to watch that one closely today. Could make that move quickly off the open. All right, Vodacom, obviously we talked about this 2 days ago. It's broken through in terms of this downtrend that it's been in. But if I just to take this away real quick, I'd like for just to show. Remember when we were looking a long time ago at this level here, which is about, call it 116.50. 117, somewhere in that region. You can see how defined it was. Really the shoulder line, or sorry, call it the neckline of the head and shoulder pattern that we broke down out of, that we were following so closely. This is the level here. It's between 116.50 and 117. We closed at 116.50 yesterday. There's a lot of so this could be a big inflection point here for Vodacom. If it gets through this level to the upside, then I think this thing's probably gonna move up considerably from here. But this could be potentially a level that Vodacom could start to struggle at, could pull back a little bit from this 117 level. All right, I'll have a look at Adcock again. We showed this a few days ago about the potential of it to break out. Obviously, it was kind of flirting with it. It has broken out. Last two sessions, it's kind of been up and above it a little bit. Like we said, this one also is really clearly defined. So, like these types of charts, to me, the breakout has come from way down here. I mean, you could look at this in a few different ways, because it was setting up a bit of a flag, and you can say, hey, we broke out all the way down here. But this is also, these continuation patterns have been working really well, and I wouldn't be surprised for this thing to have significant upside still from here. And then the last one I'm going to show is Investec INL, just to bump forward here a little bit. And show the sort of little wedge pattern that we had created. I'll actually draw it like that so that it encompasses that wick. And here, and we've managed to kind of snap out of that. We put a lot of time in here consolidating over the past month, maybe month and a half. And this breakout, I think, is significant. I think we can move higher for this, maybe test up to around the 70 level on the breakout in Investec. So watch that one closely. It had been one of the better banks, kind of going into the sell-off that we had in the financials a while back. So could have some room left to the upside. And that's it for today, guys. Thanks a lot.